Well, shares of Bitcoin falling for a fifth straight day today, hitting a 1-month low. The crypto asset now down about 1.6% as investors turn risk off amid ongoing fighting in the Middle East and then uncertainty around Fed policy. That hasn't necessarily dampened enthusiasm for crypto ETFs, with an increasing number of companies seeking regulatory approval. Let's bring in HANetf co-CEO, owner and founder Hector McNeil to discuss risks and challenges of crypto ETFs. He's joining us as part of our ETF report brought to you by Invesco QQQ. Hector, it's good to talk to you today. Let's start first with the state of play, where things stand right now, because certainly there has been a lot of anticipation for a spot Bitcoin ETF. How are you viewing this space right now?
Yeah, so thanks for having me today. Yeah, it's really interesting, everything that's going on, the machinations in the US ETF market. I mean, clearly, we've already got a futures-backed Bitcoin product, and last week we had a slew of Ethereum products, but there still seems to be a lot of noise and confusion around the spot products, and nobody can quite understand why, really. I mean, we have them in Europe, which one of our products, BTCE, and also Canada as well. So it seems very strange that the SEC can't get its head around this, to be honest.
Part of that is, I'd imagine, some concerns about the risks associated with these ETFs. How do you break that down?
Yeah, that I think is a bit of a misnomer for me. I mean, I think the horse has bolted on the asset class. I think that cryptos have proved themselves in markets, particularly the most liquid ones being Bitcoin and Ethereum. And I've got to say that it has to be. I mean, you've just talked about the FTX scandal there, and having a regulated product traded on a regulated exchange, only available through a regulated broker, has to be a lot better than the Wild West underlying crypto markets. I mean, you see the spam emails that come through on get me quick schemes, trading on some obscure Chinese or Turkish so-called exchange. That surely has to be a great way to gate the asset class, putting it into the ETF wrapper. So I don't really buy that. And I think it's nonsensical as well that you can give access to the asset class through a future, which is a derivative of the underlying, without giving access to the underlying. And I think, GBTC in the US, and as I say, products like BTCE in Europe have proved that you can do it with a spot as well. So I don't think there's much of an argument there, really, to be honest.
I mean, let's pick up on that point that you just made. Part of the challenge has been about regulating the domestic crypto exchanges, but also seeing the activity move offshore as a result of it. How do you see that being resolved when you consider sort of the broader context of crypto being traded right now?
Yeah, well, the first thing I'd do is I'd prevent crypto exchanges calling themselves exchanges. I think that's nonsensical and stupid, really, because I think there's a false equivalence. The average investor will see, a crypto exchange in name and conflate that with something like the New York Stock Exchange or the NASDAQ or the London Stock Exchange, and that seems to be absolutely crazy. At best, a crypto exchange is a broker, in the securities world, and such. That should be labeled correctly. And I think if that was labeled correctly, I think people would see through the risks a lot easier with those sorts of products. So I think that the great thing about the ETF wrapper is it really does give excellent price discovery, and with all the market makers who are some of the most world-class traders in the world, like the Susquehannas and flow traders of the world, etc. They're giving institutional grade access to the asset class to all investors, retail, through to institutional. I always use my mother as an example. That would I want my mum to go and trade on a Turkish crypto exchange, or would I want her to trade an ETF? And I know my answer would be the latter, 150% of the time. No problem at all.
Yeah, mom knows better than that, right? Hector, let's talk about investment strategy here. I mean, given the ETFs that are already on the market, how do investors put their money to use?
Yeah, I mean, we're seeing a lot of interest at the moment. We have a couple of really interesting ETFs. We do a product with Sprott based on uranium miners, URNM, which is 80% equities and 20% physical uranium. And that's actually been the best performing thematic globally this year. I think it's up about 30%. And I think it really just is responding to the increased and renaissance in nuclear power, with the squeeze on the supply in uranium, which is obviously coming out of Russia and getting away from, taking that supply from Russia. And then the other area we're seeing a lot of demand in is we've got a future of defense ETF with a ticker NATO, believe it or not, that's, is a defense ETF that's aligned to NATO countries and affiliated countries, and obviously with what's going on in Ukraine and obviously the devastating news over the weekend of what's gone on in Israel, those two things have been incredibly interesting, for investors. And we've seen a big slew of money going into both of those strategies as we look today.
Some good takeaways there. HANetf co-CEO, owner, and founder Hector McNeil. Good to talk to you today.
Many thanks.